Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the screen being shared, the disclaimer. Neither Market Chameleon, myself, Dimitri, are registered investment advisors. If you do have questions regarding your positions or anything options related, please reach out to your broker dealer for that information. This is for informational purposes only about the Market Chameleon tools. Brought to you by Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
D, you there?
Yep. Can you hear me?
Yep. You're
Good.
good.
Yep. Good morning, everyone. I'm going to share my screen so you can see Market Chameleon. If you're joining us for the first time, Will and we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube. Will's watching that live chat, and he'll let me know and read it back to me. And to give you a couple minutes to put questions in, we're going to start out looking at our pre-market report to see if we could get insights, what's going on in the pre-market hours, and then we'll move on to the questions. Okay, so
Perfect.
the pre-market report over here, up top, we have this calendar view. If you click on the date here, you could go back in time. The up on front and center, we see the last weeks of data, and that's to give you a kind of way to eyeball if there's any particular trend or something unusual that happened in most recent history. If you click on it, it'll bring up the pre-market activity for that date. Today, we are over here, March 7th, and we could see that there are 662 stocks trading higher in the pre-market, 319 stocks trading lower. As far as volume goes, we got 134 million shares trading on up volume versus 75 million on down volume. And if we convert that volume to dollar value, we have $5.3 billion worth of stock trading higher versus $1.1 billion worth of stock trading lower. So at least from that perspective, from a high level, it looks like the pre-market has a bullish lean in the pre-market trading. Let's take a look at it from a couple more perspectives, and then we'll move on to the questions. So I'm going to scroll down a little bit towards the middle of the page. And here we see a more granular view of stock symbols with price changes and volume in the pre-market with some indicators. We have a most active symbol list, our biggest percentage gainers in the pre-market, and our biggest percentage decliners. Here we see 137 stocks made our largest percentage gainers list, 55 on our biggest decliners. So that also indicates that trading in a pre-market hours is leaning more positive or bullish. Now, to make this particular list, we set thresholds for volume, liquidity, price changes, because stocks in pre-market tend to trade with less liquidity. So any stock trading in pre-market hours that meets those thresholds can make this list. It could be a small market cap stock, like you see over here. It could be an ETF, a leverage product, or an inverse product. So to narrow down this list further, we could use the filters above. If you have a watch list and you save a group of stocks that you like to keep track of, you could use that filter to filter this list by stocks in your watch list. We're going to use this filter in our example in ETF. So when I click on it, you see a drop-down menu, different ETFs to select from. We're going to choose this one, SPY. That's the S&P 500 ETF. And when we do that, the list below gets filtered by stocks that are holdings in the SPY ETF. And 18 stocks made our largest percentage gainers list. None hit our decliners list. Keep in mind, we do have thresholds in there. However, this also points to a more, just like the other indicators, that the trading in a pre-market hours so far looks like it's trading with a bullish sentiment. All right, so I gave it a couple minutes, Will. If you have questions, I'm going to stop here and take those questions. Hey, Will, can you unmute yourself?
Nothing's popped up yet, D.
Okay. So let's default to SPY, while we're waiting for some questions to pop in. And take a look at, let's take a look at the multi-leg trades that traded yesterday in SPY, just to see what were the top strategies by volume, right? So here we have a breakdown of the multi-leg trades that we detected, right? If you click on this, you get, these are all the different option strategies that we detected yesterday in SPY, with the volume, the number of unique combinations. Of course, like a put spread, could have different strikes, different expirations. So there, as you could see here, there are 2,060 different types of put spreads that's traded for total volume 259,000 in SPY. And the top ones over here, from early in the morning, 9:36 to 9:49, we saw this same spread trade multiple times, 93 separate times, for 42,000 contracts. And our software identified this as a potential Siegel ratio with put spread. Okay, so you could see here that these involved 3 legs. The expiration was March 8th. So yesterday it had 2 days to expiration. And you could see that it was a put spread with a call, right? So the 500-506 put on a ratio, 1/2.2, and a call, 516 call. Okay, so kind of an out of the money put spread with an extra call, right? It'll look like a Siegel. That's the most likely. It can have a couple different variations, but that's what this determined was the most likely strategy. So let me close this for a second. The next one with the highest volume was between 228.05 and 229.54. So this is traded within 2 minutes, the 27 times for 41,000 contracts. So didn't all trade in one, it traded multiple times, probably in different exchanges. And if we open it up, we could see the details. But this one was on an April 30th expiration. So it was all in one expiration. And the legs were the 470, 485, 500 put. And these are all $15 apart. So this is a put ladder. So we could take a look at this, but I could maybe line up different ways people can use 3-legged spreads, right? Maybe that's what we could do. But here you could see, let me just open this up. So yesterday, each of these legs traded 13,674, right? Each of these legs. And here we could see all the different trades down here. These are the supporting details. So if you click on that, you could see here, all the spread. So what we see is that they all traded the same amount. And you could see that the open interest, we're looking at today's open interest from yesterday's, increased by a decent amount close to where this volume is. So this looks to me that this trade in particular probably added to it was either a new position or added to a position. But that looks to me, without looking at the other trades, that, and this is a pretty big trade, that it was a new position and that it's existing, right? So this was a new position that was established, and so far it looks like it increased the open interest. Okay, but maybe what we could do, instead of analyzing this a little bit further, is I'm going to go to the options chain, and a quick note, actually, we're doing a webinar on Tuesday with Interactive Brokers from, I think it's 2 o'clock next Tuesday, and it's going to be on the options profit calculator, and we're going to be updating that options profit calculator the day before. So when we do that, when we do the webinar, it's going to have new features, all right, that you're not going to see today. All right, but it's going to look different. I'm trying to organize it better, make it easier, with additional features. But let's just use our current options profit calculator for an example. But if you are interested in, the different features and how that could help you with options, we're going to do a much more comprehensive and thorough webinar next Tuesday with Interactive Brokers. Okay, so, and maybe you could provide the link for people who want to register with it.
I'll put it in the chat, D.
Okay, so let's look at a three-legged spread, and maybe different combinations. And I'm going to try to keep it as simple. Let's keep it all calls or all puts, right, for now. So let's keep it all within one expiration. Okay, let me go out a little bit further. So to begin with, we're going to try to come up with different combinations and to form a strategy, okay, that involves 3 option legs, but in the same expiration, and we're going to do it it's going to be all calls or all puts. Okay, so let's start with all calls. And this is how people, they'll build call ladder. And those, we just saw a put ladder, right? Yesterday, one of the biggest volumes in the strategy was a put ladder. But let's do the calls for now. And let's say I create a call spread, initially a call spread that is bullish, right? With a target price, let's say bullish to neutral, right? So it says slightly bullish to neutral. And I'm going to pick that the stock price, I'm going to start with 510. Okay, so I'm going to sell this 510 where currently the time premium is the largest. So the time premium on the at the money is going to be the largest, right? Because in the money, you're going to have intrinsic and extrinsic value, right? Like this. And as you go up in strikes, the time premium gets slower. So let's say I start out selling the at the monies where the time premium is the largest, and I'm bullish, so I have to buy a call underneath it. So let's say a 505 call. All right, so far, this is what we did. We sold the March 510 call, and then we bought the March 505 call. So here are the prices here. Okay, so this is a bull call spread. Let's run it and see what that looks like at expiration. So here you could see that this is a bull call spread, right? So if the stock moves higher, right? These are the different stock prices at expiration. So you can see here, this line over here is where the stock is currently. And the strategy costs $3.28 if you did it on the offer. Okay, that's the midpoint. So if the stock closes above 510, right? If the stock closes above 510, well, this $5 call spread will be worth $5. So if you paid $3.28, you could see here that's $1, and it's worth $5. That's $172 profit. at expiration. Of course, if the stock drops and keeps going below your lower strike, then you lose. Both of these options will expire worthless and you lose what you paid for. And then these are the in between the strikes. So here it looks like even if the stock stops at the same price, it's already 510 almost, 509.64. This will be profitable. There's the green area. So let's say we wanted to add another call to it, and our thinking is, what if I believe that if the stock really runs, I don't want to miss out on potentially a really massive run, like above 520. Maybe then I believe if it runs, if it's not moving slowly, and if it really breaks here, it's going to keep going up. Well, then maybe an extra call to the upside works. So let's see how that would look like if I bought an extra call. All right. So let's do that. So I'm going to go to the 520 strike and buy that. All right. So that's it. Remember, all these are 1-to-1 ratio. And what I did was buy the lower one, sell the middle one, then buy an extra one up top. So now it looks this way. So now I'm not capped out to the upside. All right. I did increase what I'm paying for it, 404. So in this situation, even if the stock closes here or is above 510, right? I'm paying 404 for this. Maybe I could get it under for, let's say, $4. Well, then if it does float higher, stay here, that's a $96 return. So it's still not bad. I mean, percentage wise, let's say, if you could make a risk 4, make $1, it's at 25% return. So even if it floats a little bit higher from here, it's still going to look to me like it's a decent, if we feel strongly that, there's bullish momentum. But if it stays around here, it'll be worth $5, something you paid around $4. Now, of course, you just increased your debit, right? I forget, from whatever 3 something to 4. So if it goes down and all this expires worthless, then you lose $4. But in return, you're no longer capped to the upside. That if it does, for whatever, like say run, like maybe, there's an announcement, maybe interest rates are dropped somewhere, or there's liquidity added, or somebody announces great earnings that are like heavyweights in the S&P, who knows, then you're not capped any longer, right? And then all of a sudden after this, you're starting to again make 1-for-1 with that extra call. So that's kind of one way. And then we could definitely move the strikes around to see how that changes. We could even move the ratios around. Let's say I want to keep these legs. We're going to keep these legs for now. I'm not going to change those yet. And I'm looking at this and saying, you know what? Maybe if it breaks 520, I'm really optimistic, because at that point, we've been running. We might just run. There's no there's no sell side liquidity anymore. We might just see a big pop because people will be exhausted from selling into this. Like, I'm not saying that will happen. I'm just saying, let's say that's my assumption. I did analysis with open interest or whatever, and I'm like, we really have a chance here to really run if it goes through that 520. And I don't want to miss out. I want to make sure that, I'm prepared for it. So now maybe just like that put spread, remember that we're looking at, what if I added to this 520 an extra 1? So now I'm doing a call spread, right? A bullish call spread, and then I bought 2 extra out of the money calls. Let's see how that looks. So I'm going to recalculate that. So here's the scenario now. Well, looks like, I did increase the amount I'm paying. I'm buying extra calls. So here, let's say it's around 480. Maybe I could get it 475. So I'm still in a profit zone if it's just kind of hanging out here, right, in this zone. I did add, if we go down, now I'm at risk for 480 bucks. But another thing, though, what we did was that now to the upside, we doubled up, right? We doubled up on the calls. And now instead of 1 call, we have 2 calls there. So now we stand to make more now to the upside, right? And these are all done with just 3. I'm just doing it with 3-legged calls. So let's maybe change that around. Let's say I'm going to come here and let's say instead of buying 2 extra out of the money calls, let's change it around, right? We have the ability to change it and see what we like the best. So let's take the one that's deep in the money, 505. Let's buy 2 of those. We're going to sell the one, keep this sold at 510. 1. And I'm going to change this to a sell. So I'm going to change the 520 to a sell 1. So what I'm doing here is splitting it up. It's kind of a ladder where well, not a ladder because I have a ratio in here, but what I'm saying is that I'm doing kind of 2 call spreads here. I'm doing the 505, 510 and 505, 520. All right, so this way, if it breaks through 510, I'm still, I still have another call spread up to 520. So let's see how that one looks. I'll recalculate that. And these are all going to be like with a bullish viewpoint. So here, so you could see here right at the right here, if the stock remains here, I'm almost break even, I guess, right? Depending where you buy it. Because at that point, from the this is $10, but I have two calls at the 505. So after 510, let's say right at 510, these 2 calls will be worth $10. So here, what we did was, to the downside, we did expand that. Now we're paying $10 for this if it goes down. But in between here, now looks better. So anywhere in between, now we have an upward sloping, right? So what we did was we said, okay, we don't want to between those 2 strikes a flat line, but we want an upward sloping line. And then this kind of max out over here about 520. So if the stock stays here or floats higher, it looks profitable. It looks like our max profit is $1,000, right? And our max loss is a thousand. So it's kind of 1 for 1. But if we have a bullish outlook here, this stands to make, as this thing rises, maxed out at 520. So that's another way of just kind of changing around, and I didn't change the strikes yet. I'm just changing around the ratios to those strikes. Let's see how it would look if what we did was said the following. What if we said, I'm more concerned about how much I'm paying for this strategy. I don't mind the upside as much at the 520. All right. So what I want to do, let's change it this way, is do everything 1-for-1. So here, I'm going to change this. And here, what we're doing is buying the 505, 510 call spread. And then I sold an extra 520 to receive more credit. Right. So I did a call spread and I wanted to receive more credit. So I sold a higher one because I feel like that might be the max that it goes after that, it should slow down. That's my viewpoint. So let's see how this call ladder looks like. I'm going to calculate that. So this is much different view, right? So now what we did was we decreased our cost. So to the downside, right, we got $2.54. And in return, if it stays here, it looks like, we stand to make $246 if it's in this range. But we did create unlimited risk to the upside. So over here in SPY, if it's running, we feel like that we will be able to close out of this before, it gets there, that it will be moving slowly. So, I'm going to stop here. We're almost at 9:30, but I just wanted to show you that even with the point I was trying to make is even with 3 legs, right? I have 3 legs. I didn't change the strikes or the legs. We just changed which ones we're buying or selling, and we just changed the ratios, how much the graph and your profit potential and risk potential changes, right? Because keep in mind, I didn't change these strikes, I didn't change these expirations, and I didn't change the calls. We just changed around the combination of buys and sells and the ratios, right? And that alone can look very different by doing that. So just kind of wanted to give you guys a preview of using the options profit calculator.
That's great, D. And I put in the chat the link to the Interactive Brokers webinar. That is something you need to register for on their site. It can be watched at your convenience, though, after, but just you need to register on the site and they'll let you know when it posts to the library. I'll also put a link to the Market Chameleon library on the site because we've done over 30 webinars with IBKR.
Oh, wow.
So you can go and view them at your convenience if you want.
Huh?
Great job, Dima.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Thanks, bud.